Good morning, viewers. Sage here. You're watching 𝐾𝐤𝐴N TV live from Sydney. This is the Stocks in Action show, and we'll be looking at a few recent updates from the ASX listed companies, along with a quick glance at developments across the ASX 200. Taking a look at the stocks under the spotlight today, we'll begin with the first big news. And the shares of the ASX listed conglomerate Wesfarmers were trading down after the Australian pharmaceutical industries rejected its proposal. Wesfarmers proposed to acquire 100% of the Australian pharmaceutical industry's shares for a cash consideration of $1.38 Australian per share. The board has unanimously concluded that it is undervalued and not in the best interests of the shareholders. Australian Pharmaceutical Industries Board has considered a lot of factors like timing of the indicative proposal, its portfolio of complementary wholesale and retail businesses, expected medium-term growth, digital health and beauty offerings, earnings uplift and benefits of margin improvement. The board clarified that the indicative proposal implies a premium of 18.7% to the 3-month volume-weighted average price, which is significantly below the Australian market average for such transactions. And the Australian pharmaceutical industry said that it would only progress a change of control transaction if it recognises the fundamental value of the company is in the best interest of its shareholders. And moving on to the next big news. Trading up is Johns Lyng Group, the integrated building services company, who shared on Thursday that it has acquired a 60% controlling equity interest in Steamatic Australia, a national restoration services company. The acquisition is effective from the 1st of July 2021. And as per the ASX announcement, the deal strengthens Johns Lyng's position as a national market leader in restoration services and represents a natural progression of the group's global expansion strategy following the acquisition of the Steamatic Global Master franchise in the financial year 2019. Steamatic Australia employs 190 staff and operates a total of 39 locations. The company statement read that Steamatic Australia founder and CEO Oliver Threlfall will retain the remaining 40% equity of the business and maintain day-to-day operational responsibilities. And as per the release, Johns Lyng paid approximately 10.8 million Australian dollars at completion, comprising 6 million in cash and 4.8 million in Johns Lyng Group shares, along with a potential future earning out based on the financial performance of the financial year 2022 as well and financial year 2023. The acquisition of Steamatic Australia is likely to be immediately earnings accretive. And also making the news, USA-based cybersecurity company Whitehawk, who is a member of the AWS Partner Network. Shares of Whitehawk were trading up and post the company announcement today that its cyber risk scorecards will now be available for purchase via the Amazon Web Services marketplace by both public and private sectors. Whitehawk is the first kicking off the market and sales directly to the federal government and defence industrial-based clients. By purchasing cyber risk scorecards either annually or quarterly, the US defence industrial base and federal clients can seamlessly baseline and monitor their suppliers complying with their regulatory framework. So the key benefit being easy access to the cyber risk scorecard, utilising existing Amazon Web Services accounts without additional procurement and purchase processing. And now it's time for a short break, but please stay tuned. I'll be back with more of the trending updates for the Australian market.
Tune in to stay updated while on the move.
We will tell you where the crypto craze has reached,
Where the property market is headed next.
what the world is doing to become more environmentally friendly.
Apart from tracking the daily market charter.
Be on top of the latest news and announcements
With 𝐾𝐤𝐴N TV.
A warm welcome back, viewers. This is Sage. You're watching the Stocks in Action show, brought to you live from the 𝐾𝐤𝐴N studios in Sydney. Let's now take a look at some more of the shares making the big news today. Volpara, the health technology software firm. And the share price of the company was trading up after the company received FDA clearance for the latest version of its key science algorithm, Volpara Imaging Software, VIS 3.2. It represents a set of algorithms behind the integrated Volpara breast health platform, a product suite designed to enable earlier detection of breast cancers through improved mammography, quality and workflow, volumetric assessment of the breast density and personalised breast care. As per the ASX announcement, the clearance includes Volpara's updated open virtual appliance architecture, and this increases image processing security and makes it easier for Volpara to monitor, service and update software services. And the next news to be discussed in this session covers the cashback reward program Business PointsBet. So stock of the cashback reward program Business PointsBet were trading flat today after it announced a capital raising of approximately 400 million Australian dollars. And as per the company's announcement, the placement price will be at a fixed price of $10 Australian per share. Constant with its aim of establishing and increasing its strong position in the rapidly expanding US sports betting and iGaming market, PointsBet is undertaking this capital raising to provide funding to support North American marketing and client acquisition technology, as well as product development in the sports betting and iGaming. Capital raising will also support the company with the US market access and government licensing fees. It will also help with the continued investment in talent and scale of operations, balance sheet flexibility as well. As per the release, the placement will raise approximately 215.1 million Australian dollars and will be conducted at the fixed price of 10 Australian dollars per new share. And now it's time for another short break, but please stay tuned. I'll be back with more of the trending updates for the Australian market. Property by 𝐾𝐿𝐼𝐴. Looking for a dream home? Well, that may sound easy, but it isn't. And from looking for a property that is the right fit for you in terms of cost and other factors, to zeroing down on the right mortgage plan, there are various aspects to consider. And for the latest lowdown on the property market, tune in on 𝐾𝐿𝐼𝐴 TV with me, Sage. I will give the latest updates on the property market as well as real estate stocks to help you make the right decision. Keep watching Property with 𝐾𝐿𝐼𝐴. Thanks for joining us again, viewers. This is Sage, your host, live from 𝐾𝐿𝐼𝐴 studio. You're watching the Stocks in Action show. So we'll continue on taking a look at the shares making the news. And next up is IRESS shares, who surged today on news of the share buyback. The software provider for the financial services industry, IRESS, announced an on-market share buyback of up to 100 million Australian dollars of ordinary fully paid shares. The buyback is likely to begin post-release of IRE's audited half-year results scheduled for 19th August 2021. The company has also announced some initiatives to accelerate growth and returns to shareholders. It will fund the buyback from existing cash and committed debt facilities, and as a result, IRESS will have to maintain a strong balance sheet following the completion of the buyback. It also reserves the right to suspend the buyback. And so IRESS is building scale in large addressable markets, especially in the UK superannuation and investment infrastructure. It is underway. It's transition to a single technology platform, which is vital to unlocking scale and benefits. And before wrapping up, let us quickly glimpse through the developments across equity and commodity markets. Firstly, we'll begin with the ASX 200 performance. The S&P ASX 200 is up today, gaining 35.80 points or 0.49% to 7,415.10. The top performing stocks in this index are IRESS Limited, up 13.59%, and Regis Resources Limited, up 7.66%. 9 of 11 sectors are higher along with the S&P ASX 200 index. Information technology is the best performing sector, while AREIT had been trading lower. And thanks for joining us on that report. That's all for now. Please stay tuned with 𝐾𝐿𝐼𝐴 TV for more live market updates. We'll be back with more of the news on the markets, the economy and diverse themes and sectors. Sage signing off.